Good afternoon, ladies and gentlemen. A very warm welcome to you back on Business Today Television in our ongoing series of fourth quarter earnings where exceptional performances have come to fore. We are very pleased to join with Mr. Manish Nuwal, MD and CEO of Solar Industries. This is a little known stock but a quiet overachiever. The company has done phenomenal work and has now come into the limelight in this 4-day battle between the Indian and Pakistani militaries, in which the Pakistani military was defeated very badly. Solar Industries started out as an explosives maker and has now defense as one of its major themes. They make loitering ammunition, they make bombs, they also have UAVs and drones in their performance portfolio, and of course they also arm rockets and missiles. Namaste Manishji, a very warm welcome to you. I am sure you and your team are very proud of how the products of Solar Industries have performed in the early part of May.
Absolutely. Last 12 years, we were always investing in building the capabilities on product portfolio for our defense sector. But you know that making a product and if it get used and if it gives the desired result, so it gives an immense satisfaction and a proud feeling for a company like us.
Okay. Mr. Nuwal, what we will do is we will divide the discussion into two parts. First, let us put the fourth quarter performance in front of our viewers. Sales for the fourth quarter have gone up by 35% to 2,167 crores. They have also risen sequentially. Net profit for the quarter gone by is up 37% at 346 crore rupees versus 243 crore rupees in the year ago period and 338 crores in the third quarter. Manishji, what were the reasons, two or three, behind this fantastic 30-35% growth in sales and profit?
The efforts which we were putting in last 5 to 6 years were to basically to stabilize our international markets. Why I'm saying stabilization? Because we were keep investing in international markets from last 10-12 years. Similarly, like defense, but investment was one part, then stabilization and then ramp up. So these are the three phases which our company has been, which we have seen in last 10-12 years: investments, then stabilization, and then ramp up. So in this year, we have seen that international market has grown by 18%, and similar pace we are expecting in next couple of years. Apart from international business, the defense vertical has increased a lot, which has basically 162% growth. And if you look at the total our revenue from defense, now it is 1350 crores. So these are the two factors which has helped the company to grow the bottom lines to this number level, to this level, which is almost like 42% on PAT terms in quarterly numbers. And if you look at EBITDA margins, if you look at EBITDA
Yes.
margins, this year we have delivered 27%, which is quite more than our annual guidance of 23% plus level.
Okay. Ladies and gentlemen, just a brief background about Solar Industries. Solar has a presence in 90 countries. It has 9 manufacturing units globally and 27 units in India. They have two businesses: industrial explosives. Solar Industries is the biggest supplier of explosives to Coal India, and of course now defense, in which you have ammunition, which includes grenades and loitering ammunition, UAVs and drones. You have military explosives in the form of hand grenades, bombs and warheads, and of course the powering of rockets and missiles. Manishji, what was the rise in value and volume as far as the industrial explosives business is concerned in the fourth quarter? What is the order position from Coal India?
So, sir, Coal India tenders which we have is likely to be finished in next 6 months' time. So that's not a big issue for us. But as far as volume increase is concerned, in this quarter, which is Q4, we have seen a volume rise of 14% compared to the Q3. And in the initial quarters, we have seen that because of the political issues like elections, then rainfalls, then little subdued in the demand from various quarters has impacted the explosive industry as a whole, and we are also part of that. But from Q4, we have seen the improvements have been there in a good way, and as a result, our volume has increased by 14%. And we are expecting that in next 3 months' time, Coal India's new orders will be in the pipeline.
Okay. What is the position of the order book from the defense industry, primarily the Indian defense industry? And you also have export orders within defense?
Yeah. So the total order book of our company as of now is 17,000 crores. Out of 17,000 crores, the defense itself is now 15,000 crores, which is almost 5.5 times compared to the order book which we were having on the end of the last financial year. Out of this 15,000 crores, the order
Okay.
from domestic market is 6,500 crores and international market is around 8,500 crores.
Uh, do you enjoy higher margins on the international defense business?
Traditionally, because since we were qualifying our products with all the international majors from last 6 7 years, and we our capacities were placed well in advance, so we have that an advantage to have a long-term contracts with those customers. The margins are by and large similar to what we have in the domestic markets, but anywhere around 30 to 35% is not a problem for us to get from defense section.
Uh, Manishji, I was just looking at the breakup of sales for the full year of FY25. Defense is now contributing 18% to total sales, 1,355 crores, and this is more than double the contribution that was in FY24, which was 517. So defense grows from 517 to 1355 crores. Is this a trend that is maintainable in the coming 3 or 4 years? How do you see defense rising in terms of total sales?
Shailendra, if you look at our past 7 years of commentary, we were always saying that we are investing a lot for defense, not only in money terms, but the focus or the time of our team members which is being deployed in defense is huge. If you look at the efforts which we have deputed or put in this sector is unparalleled to any other thing. But going forward, the current market share from defense in the revenue share in the total basket, which was only 4 5% 2 3 years back, has increased to 9% in the last year, and in this year now it is 18%. Next year projected to grow and reach to 30%. We expect that this revenue share from defense will increase further from 30 to at least 40% in next 2 3 years time.
Okay, that's a fabulous guidance that you are giving. While a lot of investment, Manishi, has already gone into creating defense infrastructure, creating shooting ranges, creating the back end supply chain for explosives. What are the future projections to pour fresh capital into defense?
Like I said, that we have signed a memorandum of understanding with Maharashtra government, where we are likely to invest 12,800 crores over a period of 10 years. But if you look at the current geopolitical issues, which is revolving around our nation, so definitely those 12,800 crores will be investment will be done in next 6 7 years. We are confident of that, and it is our moral responsibility to ramp up our facilities and ramp up our efforts to provide the best in class solution for our border security. So I'm pretty sure that the MOU which we have signed is likely to be executed in next 6 7 years time.
ओके सो दिस इज द शॉर्टनिंग ऑफ टाइम फ्रेम. जो आपको 10 साल में निवेश करना था वो आप 6-7 साल में करते हुए दिखेंगे. Manish ji, at the moment there are 5 major defense businesses as I have mentioned earlier: ammunition, UAVs and drones, you have rockets and missiles, bombs and warheads, and of course military grade explosives. This 12,800 crore rupee fresh investment that you talk about will be in these 5 lines of business, or are you adding more defense portfolio?
So our core focus areas were always like energetic materials for all the ammunitions. Second was basically all the pyros, fuses, igniters, and then we entered into the propellant. So as of now, we have a facility to make composite propellants. We are going to our commercial production is likely to start, especially for single base propellants very soon. So similarly, we are expanding the ranges of propellants for our rockets and missiles. We have established the rocket integration as well as missile integration facilities in our company. And on top of that, in last couple of years, we have invested to make the loitering ammunitions. And now we are upgrading it to the next level where we can offer the counter drone systems also, which is like a counter drone means you can defend the spam drones or the drones coming from across the border or any enemy sites. And we are also going to be part of
Okay.
many air defense programs also. So I cannot name all those things, but we are putting lot of efforts to ramp up the products or to develop the products on our own as well as with the research organizations.
Okay, so one fresh line of business would be anti-drone systems, and obviously you can't share details, but air defense is also something that you are looking at.
Yes.
Mr. Nuwal, is there a possibility that you might acquire companies overseas or domestic in this space?
Like we have acquired 2 3 companies in last 3 to 4 years. So our team always keep working on those opportunities. So we are quite open to look at any such kind of opportunity which can work in tandem with our strategies for solar.
Okay. For FY25, I think the top line was in the vicinity of 7,500 crores. Let me just recheck that number and get back to you. And yes, 7,500 crores, up 24%. And profit after tax was almost 1,300 crores, up 47% year on year. Manish ji, given the trajectory of the defense business, would you guesstimate what the guidance could be for the next 1 or 2 years for top line and bottom line?
Sharendra, I have already given a guidance for FY26 where revenue we are aiming to cross 10,000 crores, and definitely, like I said, international defense and domestic business are going to do better, and as a result we are likely to have these healthy margin for the next year also. In the last financial year, compared to our budgeted or guided numbers of EBITDA around 23 24%, we achieved around 27%. So I think because of various business dynamics or changes in the dynamics or supply chain issues, currency issues, but even after we factor in all those impacts, we feel that we should be able to sustain these margin in the coming years.
Okay. So margin growth is also there, and of course, top line will move by about 33% to 10,000 crores from 7,500 crores now. How are you going to raise these fresh funds, Manish ji? Are all earmarked for internal accruals only? Are you planning to raise
I
debt
think,
or maybe
I
a
think,
QIP in the horizon? You have 73% stake in the company.
yeah. So we don't think that we will be requiring to raise any fresh equity into the company because of the cash surplus position as of now and the likely cash generation of 2000 crores plus in the coming year. We think that we should be able to manage without any fresh QIP or fresh equity issue.
Okay, so it's internal accruals and maybe some debt.
Yeah.
Debt has also come down. You have total debt of about 946 crores versus 1112 crores in the FY24. How is the debt profile looking at the moment? You are net debt positive.
Yeah, I think we have certain debts as such, pure debt level, but on net debt basis, we are having a surplus funds. So I think that we should be able to manage the current capex program with the help of the current availability of funds into the system, plus future cash flows, and we are targeting to improve our working capital cycle also. So all these three things will help us to have these kind of very robust capex plan of our company. Because if you look at last 29 years of our journey, we have invested around say 3000 crores, and in this 1 year itself we are going to invest 2500 crores. So it's a big jump in our capex plan, and that is also on the top of without issuing any fresh equity or without any taking more debt on the company's books. So we will try to absorb all the capex through these mechanisms.
Okay. Mr. Nuwal, when you look at this 8,500 crore rupee defense order from overseas uh, countries, what is the geographical spread? Are they more from the African side, maybe Middle East? Does Western Europe figure?
In my order book of defense from international market, mostly it is from Europe side only, and Southeast Asia, Europe, Middle East, and
Acha.
United States. There is no practically very less percentage from African market. But yeah, we are working with all the best in class defense companies in the world.
Okay. Mr. Nawal, when you visit Western Europe in particular, what are your clients telling you? Germany, UK, France, Poland in particular have raised their defense expenditure as a percentage of GDP, given that NATO has come out with a very strong note on trying to boost defense expenditure. What are these people telling you over the next 10 years, their game plan?
So I think it is quite visible that because of the threats which has emerged from the Russia-Ukraine conflict, now every nation has to park a big portion of their GDP for defense spending, and that is what United States and NATO nations were trying to advocate for. And after these two conflicts in Middle East and Europe side, so practically every country is trying to overcome the current shortages of ammunitions plus build the reservoir for any such kind of more conflicts. So definitely demand is very good for these products, and especially for the companies who are well qualified in their system and having the top class product and capability to meet their demand. So system as far as industry is concerned, the environment is positive for defense industry, but there is a lot of insecurity in the minds of all those people because they are not able to ramp up the things which at the pace which they are willing to. But it takes time, and everybody is part of that journey.
I think, Manishji, these are very, very exciting times for Indian defense manufacturers. We live in a troubled neighborhood. That, of course, is one of the primary concerns. But globally, I think the world is rearming, and it is a very, very good state to be in as far as Atmanirbharta is concerned. And, of course, making these high-end products are there. Thank you so much for your time. We hope to
Thank you.
make this a regular quarterly feature. Here's wishing you all the best, and all the best for R&D as also for the acquisitions that you have planned out.
Thank you, Shailendra.
Thank you. That, ladies and gentlemen, was Mr. Manish Nuwal, the MD and CEO of Solar Industries, a company that started making explosives for Coal India and has now migrated very, very aggressively into the defense space. A lot of their products, such as loitering ammunition, missiles, rockets, bombs, etc., found very good use in the last 4.5 battle that we had between Indian and Pakistan militaries, in which Pakistans were comprehensively defeated. The company is now looking very aggressively to ramp up its defense business. They have plans to invest 12,800 crore rupees over the next 6-7 years in Maharashtra alone to boost defense production. They are getting into anti-drone platforms as also air defense. Not much of the details can be shared given the nature of the business, but strong demand as far as order books are concerned for defense, about 15,000 crore rupees, and the order book from Coal India is roughly 1,800-1,900 crore rupees. Within defense, 6,500 crores is from the Indian defense setup and about 8,500 crores from international markets. That is all that we have as far as solar industries is concerned. Thank you for watching. There's a lot that's happening on the other side of the wheels. Please continue with Business Today Television.